This presentation is about the bargain retailer Dollar General. Dollar General currently employs 130,000 workers in 44 states and is headquartered in Goodlettsville, Tennessee. While Dollar General tends to thrive in rural areas, it also has many locations in urban and suburban regions. This company is primarily in the retail sector and is a popular outlet for low-income individuals in the following segments: consumables, seasonal products, home products, and apparel. As seen from Dollar General's latest 10Q, net sales are increasing. Dollar General is also trading at around a 5-year high. Dollar General has seen steady growth in each of its financial metrics over the past several years. Over the past decade, Dollar General has seen its total revenues more than double from $10.5 billion to $25.5 billion. It is projected that the 2018 revenue growth will be around 9%, which is about average compared to the 5 past years. Dollar General's dividends declared has also increased by an average of 8.73% each year over the past 4 years. Overall, each of these metrics show that Dollar General is a company that is experiencing steady growth. Dollar General is expanding rapidly throughout the U.S. Currently, Dollar General has more than 14,000 stores. This is an increase of 35% from just 5 years ago. Dollar General has experienced great success in implementing a market strategy that pushes them to expand to areas underserved by big box retailers. Dollar General plans to open 900 new stores in 2018, making it their second year in a row to do so. Dollar General has had an average same-store sales growth of approximately 2.5% since 2014, and in their most recent quarter, they boasted a same-store sales growth of 3.7%. In Dollar General's most recent annual report, they indicated a net income of $1.45 billion. Despite Dollar General's smaller revenues, it has a very high return on assets and impressive gains in net income over the past 5 years compared to the other companies analyzed. The lower PEG ratio is indicative of Dollar General being undervalued compared to its peers when future growth is accounted for. Dollar General's free cash flow to equity has seen a 13% increase from 2016 to 2017 and a slight decrease for the past year. When analyzing the increase from 2016 to 2017, it can mostly be attributed to the $112 million increase in net working capital and an $86 million increase in net income. For the past year that saw a small decrease, this was largely due to nearly $450 million in increase in net borrowing. It is not expected that this large increase in net borrowing is a trend, and it was assumed that Dollar General will have 2% growth for each of the next 3 years per the assignments directive. This will lead to growing cash flows in the coming years. Dollar General faces many risks as part of the retail sector. Because its primary customers are low-income consumers, Dollar General is especially sensitive to changes in the SNAP benefits program. Currently in Congress, there is a conference that is discussing changing the working requirements for SNAP. Adding working requirements would eliminate many users from the program, which would likely negatively impact Dollar General's bottom line. Also, there are many competitors such as Walmart and Kroger which also attract consumers who are in the same demographic group that Dollar General typically targets. Additionally, trade is a contentious topic now in the United States, as there have been tariffs imposed on many goods that Dollar General sources from. This could lead to issues where they will have to increase their price and thus their sales will fall as a result. Dollar General has had impressive growth in net income over the past 5 years and it still has many opportunities to expand. Dollar General is not as overvalued compared to its competitors and presents an attractive opportunity to capitalize on demographic and consumer shopping trends. Dollar General is not particularly vulnerable to Amazon, as it caters to customers with different needs that make them unlikely to subscribe to Amazon. Its low overhead model keeps the business flexible and adapting to shifting demographics. With continuing growth and opportunities for future expansion and cost cutting, Dollar General is poised to be more profitable than ever. In the long term, this stock is a steady and reliable addition to a portfolio looking for retail exposure.